Wonderful good day, ladies and gentlemen. Commodity TV today out of Switzerland, out of Walzenhausen, and with me here is Edward Kelly, the CEO of Inca One, and I'm really happy and proud that he's here in Switzerland on a tour. And Ed, congratulations and thank you very much for taking the time. Today is your big day, 100 tons sustainable production.
That's right, and just happened to be in Switzerland for it, the announcement. So it's great to be here with you again.
Yeah, well, as said, congratulations. And the last 12 months were, not easy. Toll milling is not an easy business, of course. But maybe can you elaborate a little bit? We spoke the last time, I think it was in January. Yeah, and now you are at 100 tons. Give us a short idea how you made it.
Sure. Well, it's been 2 years since we really officially started off on this journey. We acquired our first plant 2 years ago. Yeah. And basically, about a year ago, we completed on the financing, went through and built out the plant from the current 25 tons per day to 100 tons and finished that in January. And then I think the big question was, they've built the plant now, they've proven they can do that, but can they get the amount of ore that needs to be able to fill the capacity of 100 tons per day?
And also on an ongoing basis.
And an ongoing basis.
I mean, it's easy to get it for, let's say, 10, 15 days, but do you get it for a year?
Yeah, that's right. Mm-hmm. So we've been we had forecasted that it was going to be probably the end of Q1, late part of Q1, early part of Q2, and here we are at the end of Q2. It took us a little longer, but we've had it now processing at full 100 tons capacity for the last 2 weeks. And we've got a nice stockpile of over 1,000 tons on the pads. So we've got a nice and a good solid process in place to be able to ensure that there's a continuous supply of ore coming in.
So you said you have 1,000 tons on the pads. What do you have overall storage?
Well, overall, that's our overall storage at this point. And we'll continue to keep increasing that to minimum of probably around 1,500 tons on the pads. Okay. That sort of gives us a nice sort of buffer to be able to weigh out any kind of difficult times, etc.
Great. I always remember in your presentations, I think you have built on time, on budget, which is very important. That's one thing. But on the other hand, what is now the average grade you are working on?
Yeah, the average grade that we're working with right now is around 0.7 of an ounce, so just over 20 grams per ton. And we kind of forecasted or modeled in the very beginning somewhere around ½ ounce to 0.8. So we feel comfortable at this point in time that that's going to continue around that, and we'll be looking to optimize it now that we've got really the business running at the maximum capacity and the capacity of tons coming in that we need, processing and get a real handle on the business and understand the business a lot more. Well, now Q3 is kind of a focus to be able to really optimize that process and see where we can be able to increase recoveries, where can we increase the grams per ton, what can we do to be able to do that. And
so meaning to improve the whole process, the whole
always
business.
Improving the overall continuous process.
And I'm sure there's lots of room still.
Oh yeah.
Because you've done your homework, that's right, you have now a solid foundation for the business, and now you can grow and build up, right?
Absolutely. It's just really feel proud of our team down there to get us to this point, and it's just a great feeling that we now have got a real business operating at full capacity. It's great.
Fantastic. I think toll milling, it seems to me sometimes a little bit when I read in the last months the media, all of a sudden you get some, I would call it, competitors. Companies like, what is it, Ensom, Standard Tolling, Montan Mining. Yeah,
there's a few more of them as well. I think probably about 6 to 8 companies have announced this year from Vancouver are going to be entering into Peru in the toll milling space. So
that's right.
So I think it's a big space, though. It's a $1 billion market.
Yeah, and there's room for everybody. That's no question. The question is, I think it's only Dynacor, which is larger than you, right? And they're successful. They do a good job so far.
Very successful.
And but I think toll milling is not that easy as it seems sometimes, right? Well, where are the challenges?
Yeah. Well, there's a lot of moving pieces. It's not an easy business, just like any real business. You're dealing with millions of dollars in a $1 billion market. If it was easy, everybody would be doing it, right? Yeah. But there's a lot of moving pieces. It's not so much of a mining business. It's more of a well, I look at it as an ore processing business.
And the people business, of course, also. Right?
Absolutely, a customer service focused business, and working with your customers, building relationships with them, and yeah, it's all different facets of a business.
So let's say the others first have to prove if they come that far where you are now, right?
Well, everybody has to prove themselves, right?
That's right.
And you're only as good as your last month.
Yeah.
So
Definitely.
yeah, it's one of those things, and
Yeah.
I'm happy to say that so far we've, to date since January when we really kicked things off, we've done over $7 million in sales, and just getting ramped up. So that's a good accomplishment in a short period of time.
Can you elaborate a bit on your financing strategy? Because it seems like that you did a lot of financings. You did now a convertible again. And yeah, please, what is the secret behind, or let's put it that way, what is the strategy behind?
Yeah. Well, it was always kind of built that way by design from the beginning. We know that we needed about, say, 5,000 tons of inventory to be able to run a full cycle at 100 tons per day. So our average, what we're paying is about, say, $800 per ton for the grade that we're buying.
That's
right
$4 million.
now. That's $4 million. And we didn't want to raise all that money in equity because of low commodity equity prices right now. And we'd take it in debt. And we had talked to investors and had from the very beginning, and they said it was better to be able to draw it down when you needed it, and just to save on costs. And we're there for you. And basically, we've now gone on and secured the necessary drawdown scenarios on the investment needed to be able to have a full 5,000 tons in the process for our full cycle to run at a capacity of 100 tons per day. So it's just a matter of when we needed it. It takes about 33 days for it to run in the cycle, and we have to pay for obviously that ore up front, and it just, yeah, as far as seeing that money, it takes that many days, and we don't want to be able to just be sitting on a line of credit and paying interest on it if we're not using it.
Let's talk about some numbers, because you have shareholders. I'm a shareholder of your company, of course. Yeah,
thank you.
I'm totally happy about because I trusted you guys from the first second. And what I want to know now, what are your cash flow projections? Let's say for 2015, as of course this is your ramp up year, so we cannot say you are going on full throttle. Let's say we have the chance for the second half that you go on the full throttle, with the 100 tons. Maybe you can achieve a little bit more, but let's put it conservative. Where do you see your cash flow for this year, and where do you see the cash flow 2016, anticipating that you are still going on 100 tons and maybe you have adjusted some improvements?
Yeah, I think that if you model it based on utilization rate of 28.5 days per month, 342 days a year.
Because you need 1.5 day off for maintenance, harvest, etc.
Harvest and downtime, etc.
Definitely.
And based on 0.7 of an ounce and say 100 tons per day, $1,200 gold, that gets you in the neighborhood of about $30 million in sales, top line sales in a year. And so we're driving towards about 15 million for the second half then, on top of the 7 million we've done, 8 million we've done so far.
So it's 22 for the year probably?
Yeah, in that neighborhood for the year. I think that's kind of a fair number to be able to work with. And then from that, on a full year basis, running at 100 tons per day, say 12 months, you're going to look at somewhere around, say an average, maybe $6 million to the bottom line, EBITDA. Yeah. Okay,
so we can say like, because your market cap is like 13, 14 million
now.
That's
right. Yeah.
That's like a PE of almost 2, right?
2 times, yeah.
That's really cheap, I would say.
I'd say so, yeah. Yeah.
Fantastic. Last question. Well, of course, your plans for this year are quite obvious. You want to sustain the 100 tons, that's for sure. Any other plans you want to share with the public now? Anything you are working on, or?
Yeah, really the number one priority for us in talking to some key investors and large stakeholders in the company was to prove yourself, get to 100 tons per day, and show that you can make money at that. And we've pretty much done that now. And at the same time, go out there and look for acquisitions. And we've been looking and the sidelines as well, and looked at numerous acquisition opportunities. And it's going to be part of something in our near future. As we've said from the very beginning, we didn't get into this business to be just a 100 tons per day operation. We see that, you know, as time goes on, this business is going to be more and more consolidation, and you got to be able to grow. And we built the business with key people in our operations down in Peru with growth
you hired
in mind.
some top guys, right?
Yeah, we've been very fortunate to just
Like Jaime Pola, for example, yeah.
Yeah, Jaime Polar is our general manager, and a few other people that have joined him from his Barrick team, and they're used to running, you know, big businesses at North American standards, or, you know, world-class standards, and that's what we're bringing to this industry.
And I think that's one of the solid columns why you have that success, right?
I would, absolutely,
Yeah.
yeah. All those are pieces to the puzzle.
Fantastic. So we can say for this year, slightly profitable, but next year definitely really profitable with good money and money in the bank, of course.
Expansion.
Yeah, exactly. And future expansion is coming, right?
Absolutely.
Great. Ed, thank you very much.
Thank you.
Thank
Good to be
you.
here with you.
Ladies and gentlemen, that was Edward Kelly, the CEO of Inca One. Well, you heard it. The operation is running. The process plant is running now, full throttle, sustainable 100 tons per day. And they are, well, in the plan with 0.7 ounces as an average so far. But there is room of improvement. So that would mean that they will also improve, their process and to optimize the stuff. And what I see is what is very important. First of all, they delivered on time, on budget, and they made it. They proved that they are able to do it. They did their homework, and I think this is something which is very high yielding for the investors and also for the market. And on the other hand, they make money this year and they make even more money next year. So check out the company. Thanks for watching Commodity TV. Bye bye from Switzerland.